And with my hands behind my back, not pointing, we've got another show today.
We're back.
Yeah, my finger, no, they're behind my back. You can't even see it right now. But welcome, everybody, welcome. Hope everyone's enjoying. If you're anywhere in the Canada region, or even pretty much all of the northern parts of the United States as well, it's ice rain and it's snow everywhere.
Yeah, 100%. Well, luckily the snow was taken out first by that warm weather that we had, and now it's icing.
And now it's ice rain. Yeah. Well, we've got Greg here, we've got Karl here, myself, Brandon. A couple of things coming up in the show. As I started my pointing, because I didn't put my hands behind my back, we've got Chris Arthur coming on the show. He's talking about the the top 4 questions from the Ask a Fund Manager we do in our Facebook groups. He's going to break down those, spoofing, layering, stuff like that. Some really interesting ones. We've got Ron Hanford, the CEO of 60 North Gold, going to come on and speak a little bit about his company and what they've been doing. You've got more banter from the 3 of us, and then we've got a promo video we want to show you as well by the very, very talented Pat Moher of Ethical Image. Excited to show that. And then Johnny Mack's coming on, and he's breaking down who? He's breaking down PYX, MMJ, and Evenco.
Yes.
Evenco. That's going to always be
every time
for forever.
Yeah, yeah.
But guys, how's it going?
Not bad, not bad. Well, it's pretty red today. There are a few stocks that are doing okay, randomly, but mostly it is pretty down. What do we got here?
A sea of red is what we have.
Like literally, it's a really scary watch list. Future Farms down 13%. Oh boy.
You know what though? You're expecting this though. We've had such a great January in 2019 where we've seen a lot of these stocks go over by up 100% plus. Yeah. You've got to expect it. And everyone was so happy this
well, I think only pot did that.
What's that, sir?
I said I think only YOLO/pot did the over 100% type thing.
No, since January.
Since January.
Since January, yeah. Ozza do that. Evenco had a really nice run as well.
That was good.
CXXI, we've been talking about that numerous times. That had a really good run. Weed, a $10 billion company, doubled since the start of this year. So you got to expect there's going to be a pullback, and I think
it's
that's going to be the theme today.
They can't just always go up. So.
No.
What do they always say?
They go up and they go down.
Great one. But this is what I was saying in our chat rooms, a bold prediction that today is going to be red. This is before open, I said this.
Yes,
today's going to be red. Tomorrow you're going to see it slightly green, maybe up like 2%. Friday is going to be a pretty sideways day with a little bit of sell-off going to Friday. Monday is going to be a gap down open. By 10 or 10:30, it's going to be back to green for Monday, Tuesday.
I know, Brandon, you're becoming really famous on Bay Street with all these predictions. And later on in the show, I brought on a guest to give you some advice.
To shut up?
No. We don't want you to shut up.
Yeah. So we'll see if that prediction comes true.
Yeah.
And just keep looking. Look, you got to expect that they're going to have these ups and downs. There's still a lot more to go, though. A lot more to go.
Oh, 100%.
A lot more to go.
A lot more to go. That's the terminology I'm sticking to, my man. Would you like to counter with a different type of terminology? It's up to you.
A lot more to go.
But what else is happening in news?
The MPX Ianthus merger finally was closed today. They both were halted at the beginning of the day. Ianthus is now trading again and up 6%. So they are actually doing really well. Yeah, up 40 cents. So just shy of 6%. So
they're trading on a new ticker now, right?
Ianthus?
MPX.
So MPX has turned, well, they have like their SpinCo shares to MPXI, so MPX International now, and they are actually trading as well.
Yeah, it just went live today.
They are up 43%.
Very nice.
So
very
they
nice.
are doing well as well.
So you have some nice spin-off shares that they're actually might be going up for you right now.
Pretty much, yeah, except for I think with TD, I probably won't see those shares in there until it's probably too late.
And this is why we trade with Crush Trades.
Yeah, your shares would be in there probably by now, but with TD, they probably won't be in there for a little bit. So, and I won't even see MPX turn into Ianthus for a little bit either. So,
no, there's gonna be a little bit longer for that. But
yeah,
why don't we jump into what our investors wanted? And again, we started this. This is the third week doing this now, hasn't it? Ask a Fund Manager,
where
we ask different questions. I really like his answer on spoofing and layering. and how these institutions, it's supposed to be illegal to be spoofing, but we're seeing it done and they're not really catching that. That's with Chris Arthur. So why don't we go to that video now and see what he had to say about the questions that you had to ask. We need to turn on commenting on our YouTube. It's turned off.
Yeah, it is turned off.
And we're joined here again with Chris Arthur for another round of Ask a Fund Manager. Thank you for taking the time out of your busy day to come back into the studio and go over some questions that our investors were wanting answered.
No, yeah, pleasure to be down here. Yeah, looking forward to it.
Absolutely. So I'm going to go through these questions really quickly here because this is what we're going to be answering over the next little while. So we have a poll every week. You get to go in, put your questions in there, and then you can vote on them for 1, 2, 3, as many as you want. And the winners for this week were the following: what is spoofing and layering, and how do funds use these strategies to their advantage? That'll be the first one we go to here. What do you make of us just having the best January of the S&P 500 since 1987? Are we finally in a rebound? Is the second question we'll be going over. Then how do high-frequency algorithmic bots and trading work? That's going to be a very interesting one, going over to algos. And then what type of gains are fund managers looking for on an annual basis, and how many different risk levels do they have at this time? So some interesting questions coming up.
Yeah, great questions. I really like this week's lineup here.
Yeah, and I really like this one that we're leading into. Spoofing and layering, because a lot of people, and I've seen your chats all the time, you'll throw out those words and people will kind of be like, oh yeah, I know what does that mean?
I think I know what that means, yeah.
So definition-wise, what is spoofing and layering and how is it used?
So at a very broad level, they're both forms of market manipulation. So you're really trying to deceive other investors to the actual supply and demand of these securities. And sometimes I even see these terms used interchangeably, but there are slight differences between the two. So when we do look at spoofing, so what you're trying to do here is you're going to have an order book, and right at the top of the order book, you're going to have a false order. So say, for example, I'll use Amazon. You want to buy Amazon at a better price. Well, you're going to enter a sell order for Amazon really right at the top of that order book. And then your goal is to deceive the investors to really drive that price down. So you're going to enter a false order and then cancel it immediately. And then at the same time, you would then enter your buy order. And then your profit would be in the spread you create. So what you're really trying to do is deceive that market, but you also have to be fast enough to actually cancel that order and then replace that order. And then your profit will be in that little bit of spread.
Now, do you find that funds do that a lot? Because normally you're not allowed doing that. If you're putting up fake bids and pulling them, or fake asks and pulling them, sometimes you'll get a quick little call from IROC saying, "Hey, what are you doing over there?" But do funds get away with it?
So for the large part, it's been a legal practice since 2010, but it's often hard to monitor because if you just cancel an order, that happens all the time. But let's say you cancel an order and then enter a sell on the other side for 10 times the power. Well, that's going to raise some eyebrows. So it's hard to monitor, but in practice it is illegal, but we still do see institutional investors, pension funds, and what have you implementing these strategies, but at a lesser level for sure, and most of the time it's incidental.
Yeah, and I can imagine if they do get called out for it, it'll be a ruler to the hand. If anything, I can't imagine them actually acting on that.
No, well, there have been some fairly serious incidents, so depending on the level it's being done, whether they're a first-time offender, could be a very small penalty to a very hefty penalty in that case.
Gotcha. Now, and that's compared to layering the bids, or layering. What is the difference, and how do funds use that technique?
Yeah, so with layering, you'd be entering multiple, let's say, false orders right at the beginning progressively. So let's say you're trying to sell Amazon at a better price. You would enter some buy orders, let's say for 2000, 2001, 2002, and then progressively go upwards, cancel these orders, and then hopefully enter your sell at, let's say, $2004. So after driving the price up with multiple progressive orders, you would then enter your sell. So it's just an advanced form of spoofing, really, but there are just some slight differences in how you implement it.
Yeah, and if you look at the L2, you'll find that a lot. I found that in cannabis companies a lot, where you're looking at it. I always say L2 means absolutely nothing before 9:20 in the morning.
Yep.
You can watch it, but the amount of games that are happening there, where you'll see all these bids stacking on top of each other, and say it's at 90 cents, 91, 92, 93, 94, goes all the way up to 98. But as you get closer to 9:30, you start seeing that 98 go away, that 97 go away, because you're hoping people will look at that, put a buy order in somewhere in between that spread that you just created, and now they've actually made that bid to go higher, but you've pulled all yours anyway, and you had no intention of ever bidding on those in the morning.
Exactly, and if we're not looking at institutional investors, it's so hard to monitor if individual traders are doing these practices, especially before that 9:30 call. Yeah, it is very hard to monitor, and we do see it often with the L2s in that case, yeah.
Yeah, so if you're an investor, pay attention, look out for that. It's not necessarily a bad thing per se, but the more you're watching for, the more you can realize, oh, this might be some real momentum going into a play, or no, this person's just messing with me. I could see your games.
And often you can see, if you look at the orders in the L2, when we're looking at even numbers, $10,000, $100,000, these are often institutional players rather than individual buyers. So if you see multiple, let's say, large $10,000, $100,000 orders before the market, just be wary. Have your caution up there.
Perfect. Well, switching over to our next question then, because this is actually one that I added. You only add so many here. Oh, they're putting up two. That's fantastic. So the next question, what do you make of us having the best January since on the S&P 500 since 1987, and are we finally in a rebound after what we had the worst December since 2008? So it's very, very contrasting months.
Yep.
Is this just a short cover, like a long short cover, or are we seeing a little bit of a rebound?
So yeah, personally, I don't think we're out of the woods yet. Yes, it's a positive sign. And I'd like to point a few facts. So like when we look at January returns specifically, they're often used as an indicator for the entire year, especially with the S&P 500. So since 1950, if we just took January's return and they were positive, that would indicate a positive year 87% of the time. So the stats are in the favor there. But one thing, take this with a grain of salt, because it did predict a positive year for 2008. Another neat little fact is when it was positive for the first 5 days of January and throughout the Christmas Santa rally period and for the entire month of January, it also predicted 27 out of 30 times a positive year as well. So two stats are in our favor right there. I
really like that last one more, even more so, because that's interesting. Because we had a nice little end of the year, Boxing Day onwards, and then great beginning of January, and the whole month of January is actually we're up, like you were saying. So yeah, 27 out of 30, very interesting.
And of those 27 years, the average rate of return was 17.1% when we did see those positive years.
Very nice.
But take that again, with a grain of salt, because there are a few risks associated with that as well. Some analysts think because of the sharp snap up we saw from those lows in December to those highs in January, that those returns could be stealing out from the rest of the year.
Gotcha.
And other things to keep in mind, like the political instability, trade tariffs, China's economy is slowing down, UK, Brexit deals. There are a few things that are up in the air for this 2019 year.
Yeah. Well, no, I appreciate it. And yeah, it'll be very interesting to see that come to fruition and what happens over the next few months. Our next question, and this is another one that I think a lot of investors, even your more skilled investors, don't quite fully understand, and that's algos, high frequency trading. Where do you see, how does this work, and do you think this is a benefit? I'm adding to this question, by the way.
Okay,
do you think it's a benefit to the market having algos because it creates liquidity, or do you think it could be a detriment because it takes away the fairness, if you want to call it, of the market?
Yeah, so I'll start at a broad level. What is an algo? So it's a highly sophisticated program trading platform that's able to make multitudes of orders at a fraction of a second. So when we look at the market as a whole, we see that there are many individual investors, and then there's a small group of institutional and pension funds that really have the lion's share of the capital. So when you or I, we trade on a specific security, we're not necessarily going to move the market with our specific trades, but when that billion-dollar pension fund makes a single trade, they can move the market drastically on that security. The algos will try and buy into that dip in price. So for example, let's use Amazon again. Our billion-dollar pension fund makes a sell on Amazon. Well, that price could drop. And what the algo is going to try and do is buy that dip and then sell when it normalizes shortly afterwards and really make their profit in the spread right there.
Yeah, and you saw it a lot. Instinet, Broker 13. I know a lot of our traders are very familiar with that broker. It was amazing that over the course of the last 2 years, especially with cannabis and mining, anything with a lot of volume, you'll see that. And then when volume really starts spiking, you'll start seeing Instinet coming on the L2 if you're looking at time and sales, or just L2 in general. And they're on every cent for like the 10 orders in the bid and 10 orders in the ask, and they're quite literally shorting, buying, and selling all in tiny microdoses and just taking fractions of whether it's a penny spread, but they're doing it over and over and over. So that leads into my question then. Now that we know that these algos, or these computer algorithms that trade without a human, like we put an input and it does everything itself, is this good for the markets, or do you think overall it's detrimental for the markets?
So overall, I think it is detrimental to the markets. It doesn't play to a fair and open market by definition there. It does, let's say, normalize the bid and ask spread and does create lower trading costs, but this is not in reality what is actually happening. So it's creating a false sense of security in that bid and ask spread, because they are closing the gap, but they're doing it artificially. So for individual traders, your opportunity to make, let's say, $1 on these trades is often lowered. So they're actually lowering that spread, making it harder for you to make $1 on your trades.
Very interesting. Yeah, there's a lot of mixed opinions when it comes to algos. People understand the liquidity behind it, but like you said, it really goes into really taking away from the fairness of what the market should be. We should all have relatively the same types of chances. We know, and you know very well, that is not true.
No, the chances aren't fair to everyone, but there are some risks with the algos too. Not every algo is perfect. There's a lot of algos competing for that same little dip from the institutional investors. So if you're not fast enough, you might miss out. And not every dip is an institutional investor. Algos could be wrong. They could just be buying something on the way down. So to be a good algo, you have to be a mix of being fast, but not too fast where you get caught by those surprises.
Gotcha. And then lastly, our last question voted on was, what type of gains are fund managers looking for on an annual basis, and how many different risk levels do they have?
Great question there. So on the mutual fund and ETF side, things are a bit simpler. We see very broad categories like money market, where we're trying to achieve maybe around a 2% rate of return. Conservative, where we want that 3-4% level there. Balanced, anywhere from 5 to 7. Growth, maybe 7 to 9, and aggressive 9+. When we start getting into the hedge fund category, institutional investors, specifically with the hedge funds, there's 3 main categories that we want to look at. So those are the relative value. So with these ones, you're looking for mispricing in securities. So say Amazon's trading on 2 different exchanges. Analyst or a trader notices that they're priced inappropriately. They'll go long on the one that's undervalued, and then they'll short the one that's overvalued and make a profit in that spread.
Gotcha.
So they can do these with any type of security, any type of exchange. They're very liberal there. The second is event-driven funds. So these are ones that take advantage of one-time announcements, big things happening with the company, and merger arbitrage is the most popular there. So when we do see this happen, they'll go long on the company being acquired, and then they'll short the company that is buying out the new company. And history shows us more often than not, you'll make a profit in that spread there.
Gotcha. Yeah, it's very interesting when you start looking into it, and especially, and this is where I say, we have a lot of people in our community that are newer investors, but even people who have been investing for some time. You know how the market works for the most part. You're understanding how you're thinking, and you're talking to other traders and things like that. But fund managers and the hedge funds specifically, compared to, like, say, an ETF, whatever you want to call it, it's amazing the difference of mentality from those investors compared to your retail investors. There's completely different, because most retail investors can't utilize the same tactics a hedge fund can, because they're using their economies of scale. These massive books behind them. But just in general, I think they look for almost the guaranteed. Like find that spread and playing the odds, opposed to, I really believe in this company, I can't wait for this to be a 3-bagger or a 4-bagger. They're just taking little bits and pieces everywhere, and they're doing it well.
No, and they're doing it with leverage, and they're doing it with efficiency. They're not looking for extraordinary gains. They're looking for those little spreads, but they're looking to do them at multitude, and they're doing it at high volume. So that's what they're really looking for there.
Absolutely. Well, my good man, time is up for today, but I appreciate very much all the different questions. Like always, when you go to, after the show, you can go to FTMIG, our Facebook group. We'll have another poll up probably later tonight where we are going to ask for the next questions of Ask a Fund Manager. And not to mention, you are going to be live next week because Karl is heading, I think, Punta Cana. He's getting some sun. He's going to stop looking like this. He's going to get a little bit more color in him.
Oh yeah, let's look like this too.
We're definitely from Canada. We're definitely a little white. You're going to be on the show next week. You're going to be hosting the show with myself and Greg. So we're not actually going to be doing Ask the Fund Manager. We'll do a segment there. But throughout the actual broadcast, get ready with your questions because we can answer the questions on the fly.
Perfect. No, pleasure. Looking forward to being back next week as the co-host. And thanks for having me on, Brandon.
Absolutely. Thank you, man.
Perfect.
And back to us. Thank you for the studio for telling us that they're going to be back to us. It's very nice how they just talk in our ears like that. Thank you very much, Chris, for coming on. I appreciate it.
He's good.
There's some interesting topics that were covered there. We need to go in more depth in the near future, but I love it. Gotta learn that kind of stuff. So, Karl, you're smiling.
Well, first of all, that was a great segment with you and Chris. And I'm very excited to go to Punta Cana tomorrow.
Nice.
You leave
Friday.
tomorrow?
No, Friday.
Oh, man.
Getting a little excited there.
Yeah, you are.
Yeah, so Brandon, I know you're getting rather famous on Bay Street.
Ooh.
Get off the elevator with him, and there's girls like, oh, that's Brandon. And you know, you're starting to understand the markets. You're making money, so I know fame and fortune is just right on your doorstep. So I wanted to bring in a friend.
And you have fortune cookie now.
To give you a little bit of advice, because she works very hard at trying to look good, and I know you do too. And maybe you can relate to her.
Possibly. I don't know what's going on right now.
I hate when celebrities do something very extravagant, buy something very luxurious. There's people in the comments like, you could have donated that, or we going backwards, you could have done this and that with your money. And it's like, who are you to tell people what to do with their hard-working ass money? First of all, do you know that artists, celebrities, the IRS, out of every check that you make, they automatically take 45% of your check. That means in order to spend $500,000, you gotta make at least $1 million. Then like an artist like me and a lot of rappers that I know, they literally take care of their whole family. And that's not tax deductible because the IRS don't consider that a business. On top of that, being an artist, looking good for y'all, doing all this extra shit to please y'all, that shit costs money. Like me, for example, my bills is like, I'll say about $300,000, $250,000 every single month, and I try to put it cheaper, and it's not. So
lots of advice in there for you guys.
Oh my God.
I know you got a big family. She gave you some tax advice there. I know you're not American, maybe a little different.
Yeah.
Trying to look good. You're budgeting.
Nice. Yeah. You know what? If I ever need more financial information, I will turn to Cardi B.
All right.
Yeah. Or my 5 years of financial schooling. One of the two.
So did you like her advice, or what would you say to her?
I'd say, why are your nails so long? I don't know how you type on your phone and go to quote stream with nails like that, but
okay.
I didn't know that video was going to be played. Advice, no, cover your expenses. I will try my best to make sure my expenses are not $250,000 a month.
Well played.
Cost of looking good, Brandon.
Yeah, $250,000, man.
You'll need that just for
Clearly
tanning.
I'm wasting my money if this is what came out of it for $250,000. Come on. I should be looking like Brad Pitt if I'm spending that much money. But yeah, interesting, yeah.
Did you see I put a screenshot in our cannabis chat room. I think you'll like this. So the National Post had an article, and the headline was, the cannabis industry could be worth billions less than Canada thought. And how ironic on a day when we're having a nice red day. Strategically placed.
Are we going to go into my conspiracy we were talking about dinner last night?
But yes, but you were talking about the Globe and Mail.
I'm talking about every single one of them.
Okay.
The Globe and Mail, the Financial Post is usually pretty good, actually. The Financial Post has been good coverage of cannabis. I am a strong believer that all of these publications are being used by specific people to push an agenda, whether it be for a shorting or a pumping. It is a whale's version of Twitter. And hear me out on that, because if you've been watching the cannabis space for such a long time, you could see every single time they have all these articles going up saying, have we hit the bottom? Is it time? And they're getting everyone excited and everyone's happy. And I said it in a tweet on our Follow the Money Twitter account saying, be really mindful when people are this happy and it's optimistic. That's a sign to me now that this is all being generated by these publications, by people who are in the know, because they're selling into this great feeling. And then sure enough, it goes right on Tuesday. I said it's probably going to be read today. It's really read today. And now we're getting all these articles saying, oh, actually, yeah, we screwed up. It's not the bottom. No, actually, it's going to be $1 billion less. It's going to be $1 billion this. They're using these. Don't listen to mainstream news and make that as your sole indicator, because they're playing you. They've been doing it for the longest time. There's a reason why we keep saying fake news, fake news. It's not because all news is fake. It's because they're pushing things well beyond the means of true journalism. And that's my point on there without getting sued by them by going farther.
Okay.
Is that a mic drop there?
Yeah, that was.
Yeah, I hope that clap wasn't too
We had
too
a
loud
Cardi
for
B
everyone else.
rant, and now a Brandon rant.
Yeah. I feel like mine might have a little bit more merit into it, but Cardi B, there's a couple songs that are kind of catchy
She
from
might
time
have a
to
little
time.
more money and fame than you.
She's got way more money and fame than me, yeah. This is true, But when they're talking about the billions of dollars, I think it's just too strategically placed in the fact that they're trying to get more fear out of investors. I hope that people watching this, if you're part of our community, if you're part of the Midas community, you're smarter than that. You're not going to be listening to these people getting scared by these articles. You've done your own due diligence. Hopefully, you're starting to see these trends.
So so that's exactly it. If that is the case, then that's a tip off for you.
Yeah, no, exactly. Couple comments here. I agree with Brandon. That's why I'm reading your comment. Thank you very much. I agree with you, Brandon. There's only a couple companies really pushing the needle in this industry, and they're doing their best to be the monopoly who stands at the end. I do believe in that, actually. I don't know where I made that point, but I do believe in that. But it's just don't fall into the trap of these news agencies. They're just trying to get you to sell or buy into their agenda, and they were already 2 days ahead of whatever they're writing.
And fear and FOMO are huge.
Massive. They exist.
Yeah, 100%.
Well, moving on with the show, we're switching gears because we spent a lot of time on cannabis because that's what's really been moving today. But mining, we had Ron Hanford come in. He's the CEO of 60 North Gold. And we were able to find out a little bit more about his company, how long they've been working, what type of cheap paper is out there. That one was for you there, Karl.
Thank you.
And we had a little bit to hear what he said. Let's go listen to him right now. And we're joined here today with Ron Hanford, CEO of 60 North Gold Mining Company. How are you doing today?
Thank you very much for having me here today, Brandon. Doing very well.
Absolutely. You braved the weather. Just like last week, the flights and trains in aren't the greatest because we're seeing some really Canadian weather right now with ice rain everywhere.
Well, we've been lucky. We came on Monday this week to Toronto from Vancouver, and it was +7, so fabulous weather. I don't know what you're talking about.
Yeah, no kidding. The West Coast always gets a little bit better there. Yeah. Now, for people who are just finding out about you, or maybe never heard of you before, who is 60 North Gold Mining, and what is it you're currently doing?
Great. 60 North Gold is a company which got launched on the CSE as a public company last April. We formed the company 2 years ago, actually 2.5 years ago now, to specifically go after the Mon Gold project up in the Northwest Territories. This is located about 45 kilometers north of Yellowknife, so we have great access by helicopter. It's about a 15-minute helicopter ride from the Yellowknife Airport right up to the project, so easy access.
Yeah, and having that easy access or being in the Yukon, is that an advantage for yourself? Do you see it as an advantage?
Well, absolutely. The Northwest Territories, we've got ability to get crews in and out quickly. If we need to change crews, we can take in light consumables, food and things like that as needed. Mm-hmm. We've flown in drill rigs and things like that onto the property in the past. So again, these sling in by helicopter. We've also got lakes on either side of our main former producing gold mine zone. Where we can either go in a float plane in the summer or ski planes in the winter. So again, great access. It really cuts down the exploration costs. Yeah,
and obviously gold being your main focus. Is there are there other different metals that are currently on site that you're also going to be going into as well, or are you strictly a gold play?
Well, we had a very interesting discovery last year. I'll just back up and say this is a former producing property. It used to be an underground gold mine running from about 1990 to 97. So when we started the company, it was particularly focused on going back underground and going after extending the zone down below the former producing area, and seeing if we could make a mine of it. But since we've been on site, we've got about 1,500 acres of mineral leases and licenses, exploration targets, and we've, through surface sampling, extended the gold opportunities over about 3 kilometers. So from rock surface sampling, some trenching we've done, and then a very interesting discovery last summer. We came up with a fairly high anomalous silver zone. And this was unexpected, but it turns out it's a VMS, volcanogenic massive sulfide. Yep. And this incorporates fairly high percentages of lead and zinc as well as gold and silver. So it looks like it could be a game changer for the company. So yeah, our name is Gold, but we now have a new target which is a broader interest as well.
Very interesting. And how far along are you on your drill program? Have you just doing sampling so far, or you actually have a full plan for 2019 that's being unrolled?
Well, what we've done in the past, at the end of 2016, we did a drill program on the former producing A zone. And what we did is we drilled 5 holes about 20 meters below the old stope, just to identify that the vein has continued. The structure is about a 1 to 1.5 meter wide quartz zone where the gold is in kind of nugget effect throughout that quartz. So we are confident that the vein continues below the old stoop, and which will allow us to go back, ramp down underground, and take out a bulk sample in the future. We've done no other drilling on the project, but because we discovered this volcanogenic massive sulfide zone last year, we've currently got an airborne geophysics program which has been engaged and will start in about 1 to 2 weeks' time. This will fly over the whole property, but out of this we should get drill targets. So the plan is to drill extensively on the VMS target this year, as well as some of the other gold zones that we've identified on the property. So we got a kind of a two-pronged approach now. It's both the long term is to get underground and develop the underground into a mine, but explore these VMS and gold targets across property through drilling.
Very nice. And do you know, so you're starting in a week or two, you're going to start looking for those types of areas, and it being underground, if you find something that is connecting, does that then allow you to be drilling through the winter, or are you still stopped by the winter?
No, actually drilling in the winter is quite convenient, other than it's very cold for the drillers. But you know, the access is quite good. You can drag things around in the snow, and in the summer it can be boggy in areas, so moving things around is not quite as easy. So there's not a huge snow cover in this area. You know, maybe 1 to 2 meters, so it would be a high level. But yeah, we've drilled in the winter in the past, and this is not unusual in the territories.
And just a quick question going to the stock itself. Yeah. I saw that you guys went RTO onto the CSE. Is there a reason going on the CSE opposed to the venture that many exploration companies find themselves on?
There was a lot of shells available for the TSX Venture Exchange, and a lot of those ended up going towards the marijuana stocks. We just found that we didn't really find a clean shell. We didn't find the ideal structure, so we thought the best thing would be to do an IPO on the CSE.
No, forget that.
Yeah, that turned out to be a fairly seamless process. We had our technical report done. We created a prospectus. Mackey Research Capital Corp was the lead broker that helped us launch onto the CSE. So you know, we were very happy with the experience.
No, absolutely, and thank you for that correction. IPO on the CSE, not RTO on the CSE. So there's a lot of mining companies out there right now. There's a lot of ones that are catching a lot of people's attention. When it comes to what you're doing and what you're planning on doing throughout 2019, what differentiates you? What, as an investor, you can look in and say, you know what? Yeah, that's unique. That's actually really interesting, and wanted to make you look into more. What would that be? Well,
gold is where you find it, or where you have found it in the past. And what's exciting, when we looked at this property before we got involved, was that it was a former producing mine, okay? And it produced about 15,000 ounces at a grade of about 1 ounce per ton, so quite a rich grade. And there's no reason to believe that the vein didn't continue down. When they stopped mining in 1997, it was because gold price going below $350, which was around their operating costs, so they just shut her down. But the same people that have owned it since 1988 are the current owners, and we're doing an earn-in on that project. So I would think that what differentiates us is we've got a former producing mine on the property. We are currently permitted at 100 tons per day for mining and milling with dry stack tailings. So we are the only permitted gold project in the Northwest Territories. So we're quite unique in that sense. We also have the diversification now with the volcanogenic massive sulfide opportunity. So even within a fairly small land package, we've got, I think, a lot of exciting opportunities. I think we're also in a compelling region. The Yellowknife gold belt from Yellowknife itself to about 100 kilometers north. In 3 mines produced about 14 to 15 million ounces. Okay, so you had the Con and the Giant mine at the south end of the belt. They produced about 14 million ounces between them. And then at the north end of the belt was the Discovery mine, which produced 1 million ounces over about 20 years at a grade of around 1 ounce per ton. And the technical report that we've had compares the Discovery mine to being very similar to the Mongold mine in terms of the gold configuration, the type of rock, the structure, things like that. So I think the compelling opportunity for investors looking at this is here's a mine that operated in the past. It shut down because of the gold price in '97. There's a very similar appearing project which produced 1 million ounces some 40, 50 kilometers away. What else would I say? The government of the Northwest Territories is very supportive of mining. I mean, without the diamond mines, the Northwest Territories would really be hurting right now. And the diamond mines are not going to last forever unless more are discovered. But they've been very supportive of the mineral exploration sector. We benefited from their mineral exploration program grant called a MIP grant, as some of our industry friends have as well on the belt. You know, we intend to apply for the grant again this year, and I'm hoping we'll get some good results out of that. What can I say? The government was all down at the roundup last week in British Columbia. We had the Premier and several of the cabinet ministers down there pitching the government support of mining for the Northwest Territories. Several of the First Nations leaders were down there as well. So there's a huge commitment to the sector. So when you compare to jurisdictions, 60 North Gold and some of its friends in the neighborhood are benefiting from this. So when you compare to other jurisdictions where there's maybe not the rule of law, or there's maybe a government which is not supportive of mining, or a general populace which doesn't get mining, I think this is a preferred destination. So both for ourselves and our industry neighbors, it's great to being in the Northwest Territories. The other thing is, since we've been public, we came public at 15 cents a share. We rode the stock briefly up to the low 20s over the summertime, and then even though we put out a series of really good news releases, I think there was kind of liquidity events that allowed some of the early investors to get out, so the stock drifted down, as have most of the industry stocks, whether they're the major producers or the explorers or whatever, intermediates. So right now our market cap's around $3 million, and you know, we're sitting on what we think is a very advanced exploration stage project, as well as this new VMS opportunity. So for investors coming in, I think this is a very compelling entry point, and you know, we have more milestones to hit, which we hope will take us north.
Yeah, I was actually going to ask you that. Looking at your chart, obviously it's come down, and it's been quite a horizontal channel for quite some time now. You're sitting around the 7 or 8 cent standpoint right now. You said some cheap paper was hitting around the 15s or 20s. What type of paper do you still have out, or do you think a lot of that has been eaten through, or is it still on the sidelines, and what would that number be?
There's no way to tell. I mean, the insiders hold about 18–20% in that range, and there's a lot of very sticky shareholders that believe in the story, and a lot of the guys that came in and men and women through Mackey really believe in the story, so we think they'll be sticking with us. There's always turnover in the stock, and we've been in a very strange market overall, where you look at the big stocks, you know, the NYSE and the S&P 500 compared to gold. You know, towards the middle of last year, I think all of the gold sector was being beaten up. But the gold price is recovered now. It's over 1,300. I think there has been some movement off the bottom for most of the gold stocks, and we're up a little bit from our bottom. So I would say longer term, gold is a great insurance to have in anyone's portfolio, and you should have a range from the majors to the explorers, and the explorers are where you're going to get the most upside. So.
Absolutely. I appreciate it very much. I always appreciate people coming on the show, telling a little bit of your company, going through some questions that myself or our investors may have. But if people wanting to look into a little bit more, do you have a website, investor presentation where they can turn to?
Yes, 60northgold.com, all spelled out in letters.
And you're trading on the CSC as SXTY?
Yes, and we're also trading on the over-the-counter QB in the U.S. and on Frankfurt. So all of those, website identifiers or trading identifiers are available on our website as well.
Perfect. Well, thank you very much for coming in. I appreciate your time.
I look forward to giving you an update in the future.
Absolutely. We'll look forward to having you on as well. Thank you very much.
Thank you very much. Cheers.
And we are back. Thank you very much for coming on the show. I appreciate that. Learn a little bit something new. You biting to see if that's real gold in that loonie there, just in case. Oh, we didn't have a close-up of it. But I've said it numerous times, I'll always say it again. I love when CEOs will take the time to come on, answer some questions, learn a little bit more about them.
Interesting company.
Look into them a little bit more, yeah.
Yeah, they're on an already mined.
Yeah, and I found most exploration companies are on the TSX Venture exchange for the vast majority of them. Same on the CSC. I was surprised to see that too. I don't know if there's a strategy behind it there. You explained it on there as well. Yeah. So no, it was great having him on the show.
They couldn't find a clean shell, so they IPO'd.
Yeah, cannabis took all the shells.
Yeah, no
even the dirty ones.
Yeah,
they go.
Speaking of dirty shells,
There was, do I have this in one of my tabs? There was another article came out on the Bridgemont fiasco. I do have it up here if you'd like. So the Vancouver Courier, Canada's #1 community newspaper site, allegedly, that's what they say on their site, did a really good breakdown of the ongoing Bridgemark scandal and what is comprised of it. And there's now this new character, not new, he was named before, called Kenneth Tolston, who was then, it used to be the City of North Vancouver's highest paid government worker. And him, along with his daughter, who is Anthony Jackson, the man over there, his daughter, bought a house for over $15 million without a mortgage. So again, you got to always understand that these things are an ongoing investigation to sort of just, we're in Canada and same in the United States, you're innocent until proven guilty, but I think this paper went through a pretty good read. So if you saw that, how to look this up, it's vancouvercourier.com. Yeah. It goes into a lot of details. It was a really good read, actually. He took a pretty step-back approach and just was stating facts. Those are facts I think you should look into, because this is changing the way I think these firms are going to operate in the future. It's really this whole All Shares Matter movement, the Bridgemark movement. It's showing that social media really puts a magnifying glass and a light on things that investors don't think are done in a fair manner. I think this is one of the cases. I agree, and
I just want to let the producers know that Johnny Mac is calling in via Skype.
Okay.
And he's not getting an answer.
Not getting an answer. Well, just before that, we had Pat Moher, a good friend of ours from Ethical Image. You've seen a lot of his stuff. He's come on the show before. He's done work with several LPs, really up and coming in that space. He did a promo video for us, explaining who we are. Some of you are watching from the Midas channel or from our channel. You just stumbled upon this. Like, who are these people? Why do I care about what they're saying? We took a few minutes to try to put something together where you could get a little bit of understanding of who we are. Well, if we got that video queued up, why don't we fly to that video right now? At Follow the Money Investor Group, we provide that social media platform for companies to actually get their voice and their story heard through different interviews, our online show, Twitter, Instagram, YouTube, Facebook, our chat rooms. We just have a really great atmosphere for information to be talked about, disseminated, and shared across hundreds of thousands of people.
Our community is based on a simple fact that we want people in there to give proper due diligence and who actually want to learn about investing. It goes anywhere from your mom and pop who's never invested before and they're just learning, all the way up to financial advisors, traders, and executives of these companies.
The best part about the community is, from the investor side of things, is getting more perspective from other investors. And because we've created a healthy culture, I'd say there's some form of trust in our community, which is rare, especially on social media. People really get to know each other. I know friendships have been developed. And there's a lot of really, really solid people in our community that really just want to help people.
We keep asking ourselves, as investors, what would investors want? And that's our goal, is to create that platform that they can come to and really learn from.
I think the best part for me is helping people change their lives. You know, I reach out to a lot of people. I've built relationships and that are meaningful, and that's great. You know, I get a lot of private messages from people, really heartfelt ones, and those are what make it all worth it. It's important to give back because it feels good. It's a good thing to do, you know, like everybody, I have a mentor. I've had people that have, you know, have been that light bulb for me, and I want to be that for as many people as possible. Why not, you know?
And back, Pat. That was fantastic.
That was awesome.
Thank you very much for that.
Speaking of people that like to give back and help others change their lives, Mr. Johnny Mac is here.
He's on the line. Johnny.
How are you guys doing today?
Rather fine.
Doing well.
15 Staying warm?
centimeters of freezing rain, is it? Or yeah.
There's a lot of freezing rain. Yes, that's why I wore my warm sweater today. It's so cold outside. That's the purpose and reason. So yeah, very warm actually, too warm. It's like 28 degrees in here.
I just like to remind everyone.
Sometimes the temperature thing is a bit of a slippery slope, I guess.
It is, and I just like to remind our fine viewers, when you are in weather like this, most important thing is to give lots of space. Because if you have to hit the brakes, it's not good.
Thanks, man. Yeah.
Driving and financial
He just
advice.
made Toronto a
I don't
safer
give any
place.
financial advice. I do not give you financial advice.
Opinions.
But Johnny, who won?
Moment?
Yeah, it was just a safety moment, just based on my drive-in today. I had someone up the bumper of the 2007 Hyundai, and I thought, well, my friend, if I had to hit the brakes right now, you'd be out of luck.
Yep. Very much so. But Johnny, who won the poll? I saw there was 45 different companies added to it this time. That's the most we've had added to it for voting on. 45 different companies people asked us to look into. But I believe we did the top 3. And who was number 1?
I think the number 1 was Pyrogenesis, PYR.
Yeah, buddy.
Yeah, it was.
And that's, we've never done them before. That's a new company.
Cool. Well, I just want to give all of those investors a shout out. They have a Facebook group, and I told them I'd put a little special request in with Johnny Mac that he would do a little extra digging potentially if he had time, which I don't know if he has. Maybe I'm putting him on the spot.
The suspense, did he?
Just a little bit. I didn't actually have a lot of time, but I did dig a little bit into the financials, so...
All right,
let's jump in. Let's do it.
Selfish comment of mine to let everyone know that I asked. Sorry, Jack.
Yeah, no problem. Just a quick market overview. Bit of a mixed bag today. U.S. markets are generally down. S&P's down a little bit. TSX is up, but the venture is kind of having a rough day. I think it was down over 1% at one point. It's recovered a bit. It's only down -0.7, but obviously underperforming the larger index in Canada. So always good to know what the larger indices are doing if you're trading, small caps, which a lot of people are. Keep in mind the general trend of the index that your stock is listed on. So here's PYR. So I don't own a position in it. I remember trading this one, I want to say way back in February. I think I caught this run from the low 20s, and I want to say I sold it up in the mid 40s, thought I had done well. And then it went and doubled from there to $1. So this is a weekly chart, by the way, just so everyone knows. So, I mean, this was quite a run in a fairly short time. A lot of buying strength here, some good volume came into the stock. And basically, since it hit that peak and it's been consolidating, it's kind of been in, generally sort of almost a sideways consolidation overall with, I would say, a bit of a bearish bias, because you can see this low we got here when we got a bit of a reaction jump from the consolidation, and we've sort of lost that bottom in early September, and right now it still isn't hitting the same highs that it saw in early 2018. So from a long-term perspective, I wouldn't say it's trending strongly in either direction, but there's definitely, to me, it looks like maybe a slightly bearish bias here. So again, as I always like to start, sort of the first thing I look for are some key support and resistance levels. So this level around 40 cents looks significant to me. We've had a few bounces out of it. So I mean, that's obviously a strong support level. So, we want to see the stock hold that. And then recently, it looks like the 70-cent area is sort of an area to beat. And it's been tested, relatively, or it's been tested twice in a relatively short period of time here. From a weekly standpoint anyway, and you see we did get a rejection from that level as well. So the trading is tightening up. So we did sort of change the trend here in the fall. We were falling, and then we've on our way back up again. We made a nice higher low, but so far the reaction high, the buyers have not been able to sort of eclipse the last high, which was at 71, made in early December. So if you're long the stock, you'd be looking for some follow through here. Definitely some selling pressure here, seeing some wicks here on the weekly candles, so they're definitely getting some selling pressure here. And I did look back in the news and in the financials, and I do see, I believe it was back in early March, the company did a financing at 70 cents. And I think I've mentioned it several times when I've covered charts, that it's really important to know the capital structure of your stock and know where the paper is, who's in, and where they're at. So there was a financing done at 70 cents. I think it was something like 4 million shares, maybe a little bit more. But anyway, since that financing was done, basically the stock hasn't come close to that 70-cent level until recently. So my suspicion would be probably some PP holders, some private placement holders might be unwinding some of their positions here. Again, that stock came with 1-to-1 warrants. So, if you're in that financing and you're selling around 70 cents, even if you're selling for break even, you still have access to the upside through the warrants, which is nice. It's a de-risk strategy to profit from the upside. A lot of people use that strategy. A lot of sophisticated investors tend to use that strategy. So, not surprised that we're getting some selling pressure up here. So, I'd say getting past here would be a good first step. And it almost looks like we're going to get a rejection here, perhaps on the weekly. And ideally, if you do see that, you want to see the stock form a higher low than what it did here in the low 50s. And if it can do that, it's going to take another run at this resistance. That would sort of put into play what's called an ascending triangle type pattern, where it's the same resistance always holding things back, but the buyers are being able to form higher and higher lows each time. So that would be one thing I'm watching. The stock is week moving average is down in the around 60-cent level, so we're trading above that. The 50-week moving average is starting to flatten out here. It's been falling for a while, so that's a good sign, and it's trading above. So those are some good signs, but it need to see some buyers follow through, and it could take some time to to break the 70-cent level. Now, if it were to, I'm going to look right back. And it's not even that far away. We definitely see sellers evident here in the 80s as well. So in this push here as well, we had you see a lot of evident selling pressure at all these higher wicks. And so, it's obvious that there's some selling pressure here as well. There is, I think I did find some convertible debt on the stock as well. And convertible debt, again, I find in my own experience, a lot of the people that buy convertible debt, they like to, if they can, exercise that convertible debt into shares and cover off their initial capital, again, they're going to sit risk-free on their warrants if they can. So that's another, potential headwind for the stock. Even if it breaks 70, you still have that convertible debt sitting at 80 cents. So anything around 80, and especially any push higher, that might give you some headwinds on the stock. But yeah, I think it'll be, the interesting thing to see is how it's going to play out, I would say, between these two, support and resistance zones right here. And it is a fairly wide range. I mean, if you're a trader, you could be playing this, the support and resistance. But if you're long the stock, I think it looks to me like we might see a bit of a push down. But, if you can form another higher low and try and challenge this resistance again, that would be, putting it into that ascending triangle type pattern, which would be, has a bullish bias to it. Another thing you could do, I didn't draw it on the chart just to keep things simple, but if you're into drawing trend lines, I think you can draw a trend line kind of like that. We've got 3 touches on it and almost a 4th that the stock just didn't quite get it. So we do have 3 touches on that trend line, so you could also use that trend line as a potential indicator, if the stock were to come back down and then make another run and push up, especially with volume. Looking at the volume's in kind of, I'm going to use the word boring. It's just, you don't see a lot of variation. It's just kind of slow and steady. But if you want to see the stock breaking out, you want to see it done on volume. So if you're looking at that trend line and using that as a guideline, which you arguably could, then just make sure that the breakout has some good volume behind it. And that's what you always want to see. The stock's trying to get through some of these key levels. If it can get through 70, get some volume. A lot of time that volume obviously comes on news. And I know, I think this company had a pending contract with potentially the U.S. Navy, I think. So, I mean, that's a positive catalyst. But that information is also out in the market, so you have to also realize that that's been potentially priced in as well, or at least somewhat priced in. So that's the weekly chart. If we zoom in to the daily, just sort of have a support line coming up here, support trend line. It's had a few touches on it as well, so I'd call it valid. I would look for some support just based on the daily chart, the way it's behaved recently in this green zone here around 60, so basically high 50s to 60 cents. We did get looks like the stock is getting some support off its 50-day moving average, this blue line here, so it's tested a few times and held. Got a small move below here, but it's held, so that looks like it's acting as support, which is a good thing. I mean, the stock is generally above most of its key moving averages here, but kind of along the same lines as the weekly chart, I'd have my eyes on this 70-cent level, give or take, as resistance, and then looking for this to try and set a higher low. We did get, again, evident selling pressure here, some higher wicks, and we obviously got a push down. So you want to see, a higher low than what we saw here at 57. and then another push up would be ideal if you're a bull. This correction we did have was sort of telegraphed. We did have some negative divergences here on the PPO, the RSI, stochastics were all, even though we were putting in higher highs here, we were getting lower highs on all of those indicators. So that sort of foretold this little fall that we're having here. So I would say that's my take on PYR.
Thanks, John. That was rather in depth.
Yep.
That was great.
Yeah. So the next one, this is I think this is arguably one of the most contentious and stocks that I've ever encountered in my trading life. It's a Matica MMJ. This is the weekly chart on it.
Name again? I've never heard of that one. What's it called?
Yeah, MMJ. It might have been. It's been out in the a lot of drama, a lot of strong feelings on this one, from my experience. So this is a weekly chart, and to be perfectly honest, when I look at a chart like this, if you're long on the stock, there's not a lot to be excited about chart-wise anyway. I'm not talking fundamentals, but just from a chart standpoint, you're seeing a lot of weakness. So I mean, quite a run it had in 2017. It peaked like every other stock did in late January. Again, this is a weekly chart, and then it's been basically downhill ever since. So right here, the buyers tried to, we put in a higher low here, so we were able to get support, and I've identified this area around the 15-cent mark. This was a previous resistance zone that had pivoted to support, so you got a few bumps off of that, which is good. So the buyers pivoted to support, which is what you want to see, and put in a higher low here, and then we have this huge sell-off event. You can see the volume, and now it's actually showing gray, which would be buying volume. But if you look at this candle, this is your open of the week, and this is your close. So you basically closed almost at the low of the week. So what you're seeing here is just and that's what I thought. I figured that's the week they got their license. So what this tells you is there was a boatload of paper just sitting and waiting for that license to use the news of the license for liquidity to exit their position. So all of the buying interest that came in, there was just a ton of supply that came on the market and completely overwhelmed all that buying. And look at that spike in volume. That was 36.5 million shares for that week. So that basically, this was almost what I would call like a fake breakout, because you had set this higher low, set yourself up, and then you broke this previous high, but then just completely overwhelmed. And then, like so many times when you see kind of a breakout fail, a breakout move fail, you get a very strong reaction in the opposite direction, and that's what we've had since. The next week, again, higher volume relative to some of the other candles, and a fairly strong red candle there. And we're back to setting lower lows. And the stock has come back to this level that it basically was finding support at in the fall of 2017. So you did get a bounce, but you're getting a much lower bounce here. And the thing that I would be concerned about is this area around the 15-cent range that was acting as support. We've now confirmed that this has pivoted to resistance, and you look at this upper wick again and a spike of volume. So yeah, we got this spike in volume, and yes, it closed higher than the last week, but look at the sell-off here. There's a lot of supply coming on the market, and there's just not enough people to take it. So it looks to me like it wants to it's probably going to curl over here again. That would be my best guess. And if you're long the stock, then you're basically hoping that you're going to be able to hold this low or higher, so you can potentially turn things around if the stock can find some buyers and make a higher low on the weekly. But to me, with especially the sell-off event, it looks like it's probably heading lower in the near term anyway. And notice, by the way, I forgot to mention, but notice on this sell-off, again, we saw a previous area that was acting as support, and it acted as resistance. So people used that as a way to exit the stock. So keep an eye on that. Again, it's something to be aware of when the market has things priced in, when the market kind of expects a it kind of expects the license to come in. It's sort of priced in, and you had a bunch of people sitting in the weeds basically waiting for it and preying on investors to be able to unload their shares. You can see in the RSI here, sellers very much in control. The stock hasn't even been able to get above 50% on the RSI, which is positive momentum territory for a long time. The last time it did was in the spring of 2018. And very negative reading on the money flow, and basically that's coming from this right here. Anytime you see a lot of finishes where you're finishing towards the low of the day as opposed to the sort of the low of the candle as opposed to the high, so these upper wicks, that's all giving you this very negative money flow, and that's telling you have distribution. So you have people looking to unload shares and there's not enough buyers to take them. So I mean, it's got some work to do. The current things, it's got some work to do. I mean, let's just put it that way. Let's zoom into the daily charts. So on the daily chart, one thing to note is it was on this recent spike able to get above 60%. So I always pay attention if the stock's been in a downtrend and the buyers are able to push it above 60. That does show that in my opinion, that the balance of power where the sellers are very, very much dominant has potentially changed, because you shouldn't see a move almost into overbought territory if the sellers are in full control. But again, unfortunately, so here's the push, and you had a nice little consolidation, sort of an equilibrium pattern here, tightening range, and then a nice push with some volume, which was good. But then look at the next day's reaction, basically almost like a piercing candle here. You gave back a whole bunch of it and on much higher volume. So the sellers are really, the sellers are obviously very, there's a lot of people looking to exit positions by the looks of it, and just not enough interest from buyers to take that supply. So this 12.5-cent level seems to be holding for now for support. I don't just update it, see if it's still holding. Yeah, it's still holding. But the rebound after the sellers pushed it down, and you see this rebound, we got a gravestone doji here, very weak rebound, not a lot of volume. So the buyers really aren't flexing their muscles to try and maintain this momentum. So I think you want to see this 12.5 level hold and take another shot at this 15-cent level if you're long the stock. But obviously some very determined sellers around this 15-cent area, and if this level doesn't hold, I'd be looking down around the 11-cent area. That was kind of holding as a support here before we made the move. So, and that's the thing I always look for just before a move. If the trading range is getting kind of narrower, what's the area it's sort of bounced off of? And that 11-cent area, maybe 11.5 is where it got its boost. So if it does fall, then you can kind of expect that area to act as a support. Again, I'm always a little bit leery on TA when the stock gets this low, especially when you're nearing single digits. It sometimes becomes hard because each of these little ticks represents a lot percentage-wise. But you are seeing, again, the intermediate term momentum. Even though we've moved into positive territory, you can see that we're getting a signal line crossover here. So it definitely has a lot of work to do. I would say first things first is get back above this 15, try and reestablish that as support. That would be a good start for the stock, and it's going to take volume, and it probably is going to take some good news, and I suspect the overall markets to cooperate as well. Or
maybe take some options. Were there any options granted yesterday?
I saw 5 new people got options actually. That was in our chat rooms.
Did you do some DD on those people?
Not remotely, because quite honestly, I'm just not looking at the company right now. I'll be honest, I'm playing with Karl. Don't invest in them at the moment, and I don't know.
All right.
Johnny Mac, we just had someone asking, do you have any position in MMJ at this current time?
No, I do not. No, I do not have a position.
Gotcha.
I do, just as a general rule, if I am covering a stock, I do try and disclose if I have an open position or not. But if I don't say it, it's because I forgot and not because I'm trying to hide anything. But no, I do not hold any position in MMJ. And based on the weekly chart, personally, this isn't investment advice, but personally, I don't see a lot of things to like. for myself, if I was looking longer term anyway as an investor, I'd want to see things sort of turn around a little bit more. But I also don't follow the fundamentals of the stock, so that, there's probably people out there, don't take it personally. This is just what the chart is telling. This is just what the behavior of the stock is telling, as opposed to what the fundamental story may be.
And for those of you that are following the story on a fundamental basis, you could always reach out to their rather new IR firm, marycom.ca. I'm just looking at their website here, but the internet is rather slow.
Ooh.
Might not be able to get this. So the phone number is 188-585-6274. And you can get an update.
Fair enough, fair enough. Oh, now he's doing everyone's doing the bangs after points now.
Stock number 3 was Evenco.
Oh,
hey, we got him into it.
Oh, fuck it. I think we got an undercover Pearl Jam fan, or maybe he. I don't know, John. Are you a Pearl Jam fan?
Can't stop that.
Damn.
Being a rock singer was actually my second choice, but
so he likes Eddie Vedder. He's an Eddie Vedder
training stock.
Got it.
Yeah.
That's funny.
So we have covered this one before, and I think we were back here somewhere. I think we were back in November, and man, that's like 2 months ago now, and that's crazy that time has gone that fast. I made some comments back then, and I'm kind of going to stick by the same comments. So,
time out, John. Time out. They are a client of FTMIG. Just got to get that out there. Evenco is a client.
FTMIG.com.
FTMIG.com.
Okay. Yeah. So I don't own a position in them, but so you have some resistance here. Around the low 30s, low 30s here. I think I have it marked 30 to 33 or something like that. You can see after this this fall down, that's kind of where the stock was bouncing off. And then on this rebound, so we did get a nice push out of there. And I guess another thing to note is it was a nice trading range back when we first covered it. And around 25, that area was acting as support, sort of in this green area. And then we lost that twice, but I think if you look back on, this is right when the markets were sort of at their ugliest. So that's, that sort of explains why we lost that support twice. But I think that support will probably be a decent long-term support going forward, and I'll explain why shortly. And some of you that remember me covering it for the first time might remember why. But anyway, nice push up here with some increasing volume, which is good. And then look what happens. We run into resistance at an old support level that we broke. So this area around 40 cents that was acting as support previously. When the stock runs, support becomes resistance when you break it. And here we are running into that resistance level. So confirming that has pivoted to resistance. So we're getting this push down. And we've unfortunately lost this low. So the rebound, you're looking to see ideally would have been a push to continue up higher, but we didn't get that. We got a lower high, bounced back, and then we lost the low here around 30 cents, and we're trading below. The 50-day moving average, I think that's what I was trying to note with that green arrow, is that's kind of in the same zone. So we're sort of at the bottom range of this resistance area that was, to me, kind of looked like it had shifted to support temporarily, but potentially in jeopardy with the move today. I know, the whole MJ sector is sort of in a correction mode today, so that's likely having an effect here. But it is important to note that rising 50-day, or I guess I would call it flattening now, we have lost that sort of key moving average. So I think my point that I wanted to make, and I brought this up before, if you look into the company's financials and where it's been financed. So most of the money for this company came in a big financing, and that financing was done at 25 cents. So a lot of the money that's in the stock was in at 25, and that's why you would expect 25 cents to act as a support. A lot of people thought that was a good buy at that level, and they're not going to have any interest, is certainly to take profits at 25 or lower, because obviously they would be in a position of loss. And the only people that would, depending on how the company was, the RTO was structured, I don't know if the old Shell company, if those shareholders would be in a profit or not at 25 cents, but certainly the new money at 25 cents, you know that's going to be a support level. So I've identified that in green. We also have the rising 200-day moving average in here. So I think this is going to be a pretty reliable support because, again, I don't think a lot of people that were in the stock at 25 are going to want to sell it. I suspect the people that were selling it here, they were either in the stock with the shell company pre-RTO, or it's people that really got scared of what they were seeing in the overall markets and decided that, they wanted to bail and just, if things were going to fall apart, they wanted to cut their losses early. So now on the upside for resistance, keep in mind, and we mentioned it last time, there is a well-known hedge fund that owns a large amount of convertible debt on the stock, and that debt converts into shares at 30 cents. So as soon as you get 30 cents or higher, you're going to have a headwind. And we know this reliably because the hedge fund has been selling aggressively into any rallies. So that's what stalled this rally. This whole time the stock was climbing, the hedge fund was unloading shares, and this slow decline here is basically, a bunch of supply coming on the market. It's convertible debt being converted into equity shares, and there's just not enough buyers to take all those shares, and it has to come back down. So anytime the stock moves up, 30 cents or higher, potentially, the hedge fund is in a position to sell, convert into equity and then sell those shares, cover their original capital, and then they're sitting risk-free on their 35-cent warrants, of which they have, I want to say, somewhere around 13.3 million. And I think there's around, I think it's more like 33 million, and I think there's around 13.3 million shares equivalent left in convertible debt from that hedge fund. So I suspect that's what you're seeing here. Anytime you have a push, those guys are going to be selling into you, flooding the market with a bunch of supply. And maybe flooding isn't the word, because they're probably going to do it, with some due diligence or some care. But as they're adding all this supply on the market, if there's not enough people to keep buying those shares, it's gonna push down again. And anytime you have a run above 30 cents, that same hedge fund is a potential seller. So that's the headwind that the company really has to push through. And until you get pushed through that, I think it could be tough, to see a real sustained rise. When you think of it, they intend to sell those 13.3 million shares that they have left. I think that's what the math ended up being. Unless you're able to find buyers for those 13.3 million shares, it's going to continually push the market down. So that's why I would kind of expect the stock to trade more sideways. That's my own expectation. I think this area that it hit around the 40-cent level, especially because that was previous support, that likely will be a decently strong resistance point, and then you're going to have your support area down here at 25. So if you like the company long term, and certainly every time it dips into this 25 area, I think certainly from a chart standpoint that looks like a relatively safe bet. But expect some grief every time you move above 30, and especially when you get into this 40 area. Now, if it was to break this area, then you've got some headroom to go. But again, that hedge fund is going to cause some issues.
I'm going to ask a favor. Thanks for the breakdown of Even Co. We don't want to give advice, but it is very important to understand who where the debt is, who owns those shares, what hedge funds are in there. Mm-hmm. There's someone in the Even Co. Facebook group asking today, what's going on with the stock, and I was like, well, I kind of tried to give them a hint, but hopefully they watch the show. I would like to see if you can do something for us here that you haven't pre-planned. Can you pull up the Namaste chart and maybe just do a little bit of TA on the last couple of days, or maybe go as far back as maybe a week to today, because it's quite a trending topic right now with Mr. Dollinger having, I think he's sort of been forced to step down, which he is coming on minus today, just so everyone knows.
4 p.m. Eastern.
And maybe while Johnny pulls up the chart, if he can, we just have to remind everyone that we weren't able to go live on our FTMIG Facebook page today, so we went live from our YouTube channel. There's some technical difficulties here in the studio. So you can always subscribe to our FTM Media YouTube channel, hit the subscribe button. Maybe we'll go live from here more often, or we'll go simultaneously in the future. Well, who knows?
We'll just do an inception. We'll go on Twitter, on YouTube, on Facebook, on our website. You get to choose.
Correct.
We give options.
So do you want to hit it up, Johnny?
Yeah, I have it queued up. I still have the chart, the Namaste chart from when we did the analysis on it. I think it was 2 weeks ago. So this, I haven't marked this up. Obviously, this is just the historical one, but I think I had flagged here. This was a key or a support zone around $1.30, give or take, and we were seeing that support kick in when it broke through. So we lost that temporarily in late December, again with that really aggressive, ugly bottom that we hit in the S&P and the TSX and whatnot. This was actually like a bullish candlestick pattern, and we got back above support and it held the support. So on this news that came out about their CEO being, terminated with cause and, initiating a lawsuit, and now I understand, I think he's initiated a counter lawsuit. You are seeing that previous support area. Look what it's doing now. Look where the high came. This is the weekly chart, but look where the high is coming. So you've lost that support level, and now it's acting as resistance. It may be a little bit clearer if we. This is the daily chart. So this, I don't have it drawn on here, but almost roughly between these two green lines, give or take. So this would be the area that we would have expected support. But you've got a big gap down, obviously, on volume, and a big gap to fill. Now the buyers did buy the dip. This candle ended up closer to the high than it did the low, which is good. But not seeing any follow through per se right now. Looks like we're consolidating. So these are inside candles. So you have this whole width here of the candle, and then your last 2 days of trading are occurring within the bounds of this candle. So basically, I would look to see how does, maybe from a longer term perspective as opposed to day trading, how does this candle break? Does it break to the upside? If so, then you're likely gonna fill your gap, but I would expect this gap to act as resistance around the $1.36 area. If it breaks down, then you're looking down here at these lows made in December. That would be, and then potentially around $1 here too. Yeah, you might have some support, and actually you can see that we did get that support. So this was an area I had flagged as support, and you can see the candle came basically right down to that area. So that's what provided the reaction bounce on day one, and if it does fall, I would expect the support to be there. But if that breaks, then you're looking all the way back to these lows, and basically looks like around 80 cents plus or minus 10 maybe, or what it said in late December. So watch to see how this trading breaks, either to the upside on the candle or to the downside. But everything's taking place within the confines of that one daily candle right now.
You want to do one more on the spot live? You want to hit up Afria? It's trending. If you don't want to.
Is it? I was going to cover. I did have CCW up because it was like the fourth pick. I can do that one if you want, or we can do Afria, whatever.
No, dude, whatever, man. It's all good. We got probably another 6 or 7 minutes we can kill here. Give the people what they want, which is not me. It's more Johnny Mac. Or you could just sing some any better if you want.
Yeah. Afria did fill us. Afria's looked really strong lately. I mean, it ended up filling its gap, the gap resistance here, and it actually blew through it. Not only did it fill the gap, it blew through it. Big increase in volume, really sharp increase in price. You know, not unexpected. You're getting some consolidation here, but you know, quite a move down. Bounced off the 100-day moving average as support, and buyers basically bought it almost right up to the top yesterday. And then the whole sector, I think, is starting to feel some pressure. You're starting to see, and this is the same story that, you know, if you've been investing in the marijuana market for a while, it's the same story that we've been used to for a while, and that is, you know, the sector runs hot. There's all these bullish articles, and then all of a sudden the shorts start to show up, and all of a sudden you've got, you know, dozens of bearish articles being put out about, you know, the marijuana sector is gonna be a flop and da-da-da. You know, all designed to play with people's emotions and swing the trade in the direction that they, quote unquote, you know, the royal they want. So right now, this is you know, you are seeing some indecision here on this pullback. So the buyers are sort of making a pushback, and today's support is actually coming on the 200-day moving average. So the stock was able to get above, and now that it's above, it is acting as support. And just in general, the fact that the stock was able to reclaim its 200-day moving average and get above, that's more of a bullish long-term signal, and that's what you want to see. The other thing you are seeing, I mean, the volume is staying pretty strong. We'll have to see what the volume ends up being today, but you know, I would say the volume looks still pretty high. We're not seeing the volume necessarily drop off much on this consolidation. So what you're looking for is basically a higher low, and I mean, your last low, you're looking way down at like $9, because you know, you pivoted off that. So it's got a long ways to go. You know, it's likely to form some sort of higher low, and whether it continues and pushes higher, or whether it, you know, forms a lower high and we get some sort of equilibrium, that would be what I would be watching for. And then one thing I will add, when I personally, this is my own style, when I see these big, sharp, strong moves like that, I always look to see if the 8 EMA is the exponential moving average I use. I find that can be stocks that are really strong and that are going to stay strong. The tendency is for them to rebound off that 8 EMA.
They officially rejected the Green Growth Brands offer, which makes sense because the market cap went where it did. Yeah. So maybe Green Growth Brands counters that, or someone else comes in. I know there were some rumors going around last Friday, remember, on Midas, that company with an A. Right. Who knows?
Yeah, FREE is down 7% as we speak, 6.97% to be specific. And we did numerous polls, actually. I know you made several of them on Facebook, on Twitter. Do you think this is going to go through at the current price? And it was emphatically, people are saying no. I don't think it's going to go through.
Yeah, but you know, you can't blame them. It was a good move. Exactly. Everybody learned who they are, and the sector was down. Why would you not try to make a run at a big LP like that?
So you're saying instead this was a very strategic PR move, opposed to any actual intentions to buy the company?
No, that's what you said. I am suggesting that it was a really good strategic move, because even if it doesn't work, now everybody knows who you are. So where's your downside risk here?
So it was a great PR move.
I think. No, anyways.
So you think somebody's going to buy Namaste then?
Johnny Mac, what did you see the latest few articles out there about the whole Bridgemark fiasco? Might as well give those gangsters a shout out.
Shout out to the Bridgemark gangsters. Yeah, they're certainly getting lots of press, and you know, some people in formerly high places are getting some probably very unwelcome press from this whole affair. Obviously, everything is, you know, allegations until proven in court, but certainly a lot of evidence has been presented, and we'll have to see how that plays out. But I'm sure there's some people in Vancouver that aren't very happy right now with the you know, the press coverage that they're getting.
How are you feeling, my friend, about 2019 in the markets? Do you still see a lot of sort of risk out there, given the fact that last year was so volatile? Lots of talk, you know, depending where you're going for your reading or your like BNN or whatever, about recession. Some people argue we're already in a recession. What do you think? What do you think about 2019? You think we're going to have a good year?
I think it's going to be a very volatile year. I think I've gone on record. I've been sort of contrarian against this big the rebound we're having. I mean, I'll give the market credit, and I'm talking more the U.S. market, just an incredibly strong push off of that December low, much higher than I expected it to go without consolidation. The market has shown a lot of resilience. There's a mixed bag of signals out there, in my opinion. Things I'm looking at, like on this rebound, the area that I thought the S&P would fail, it's sort of gotten through. It's through the 60% level on the RSI. It's through some key prior broken support that you would have expected to act as resistance. The VIX, the volatility index, that's measuring the volatility of options on the S&P 500 has fallen below 16. And that's basically telling you the market is, the market is feeling much more comfortable about the future. Some people call it the fear index, but what it actually measures is the volatility of options. So the people that are writing options, how much premium are they asking to the people to pay in order to purchase that option? So the more volatile they expect the market to be, the more expensive the options and the higher the VIX, essentially. So, the VIX being as low as it is, I was quite surprised. I was quite surprised that it's got as low. So I almost feel like there's a little bit of complacency coming into the market, especially with people that have never been through a bear market before. They're thinking, oh, that's it, the bear market's over. It lasted all of a month, and we're free and in the clear. I'm just not in that boat yet. I feel like when you have the move down like we did, that's such a strong move. Very high odds, in my opinion, that you're going to get another similar strong move down. And I don't know if it'll eclipse the December bottom, if it'll match it. I'm not sure, but I would expect at some point another strong move down. The bond market, for example, treasury yields are not really following stocks up, so there's still money moving into bonds, which doesn't really fit with the whole, if everyone's real comfortable in the stock market, why is money moving into bonds, which more of a safe haven? And so to me, that's concerning. And but we'll see. I'm currently, qualifying that, I am currently short on the S&P 500 with put options, because I just think it needs to correct. But
well, my friend, I hope you do well on those. And thanks for coming on the show. It was great value added again. We hit up more charts than we thought, which is good.
We did.
We'll get those out into social media land. A lot of those stocks we covered today have their own Facebook group, so we'll get that off, and that's value added for them. Again, a reminder for people to follow us on FTM Media on the YouTube page. You can subscribe. Go to our FTMIG Facebook page, hit the like button, and follow.
Did you see that, folks? He just pointed to me. My hands were tied. He's the pointer now.
The producers are telling us we have to go.
Is that time already?
Yeah.
Is that time?
Johnny Mac, I'm gone to Punta Cana next week, so fuck all of you, and
very nice way to end the show. Why not?
Yeah.
Yep. Because we're gonna have Chris over here, and Chris has a little bit better language. Although it's funny because he says poo because he won't even say shit. So it's funny how that works sometimes. But hey, we'll see you next week, Wednesday, pointing everywhere at 1 o'clock.
Later, John.
See you, bud.